Hey guys, it's Jonathan Rose. How's everybody doing? So I wanted to get a video out because right now, in my opinion at least, there's a really good setup in the bonds. And I'm going to trade bonds a little bit different than you've probably seen before because I'm looking at everything from a relative value standpoint. So I'll explain that. In front of you is ZB Butterfly. And what that means, it's the 30-year against the 10-year against the Ultra Bond. And think of it like a butterfly with the 30-year, the belly being in the middle, and the two wings being the 10-year, and the other wing being the Ultra. Now what this chart is showing down here, the ZB is very inexpensive, but it's only inexpensive relative to the ZN and relative to the UB. Now on 9.8, 9.10, 9.12, 9.13, the ZB strengthens up, strengthens up, strengthens up, but it's getting stronger, again, relative to those two other instruments. Well, now the ZB is getting very expensive, but it's only expensive relative to its neighbors. So this doesn't mean the ZB is expensive and going down. All it means is that relatively, it's expensive to its two counterparts. So in order for this to go lower, the ZB might trade lower, or the ZB might not move at all, and the 10-year and the Ultra go higher. To me, and I've been trading for 18 years, trading a relative value approach makes a lot more sense to me because I always feel like guessing on direction, to me, speculating, gambling, crossing your fingers, that never made sense to me. I always want to look at things relative to one another. So think about Netflix against Blockbuster, Coke against Pepsi, the 10-year bond against the 30-year bond. That's how we want to look at trading. At least that's what I do. The best way that I would take advantage of this opportunity right now is I would do a portion of the butterfly. So right now the ZB is expensive relative to the ZN, relative to the UB. Here's how I would trade it. I would do one portion, and I would do the ZB against the UB. I know I definitely want to sell ZB. I don't want to sell ZN. I don't want to sell UB, right? I mean, look what's going on here. So if I just look at the ZB against UB, one portion of the butterfly, I could see that's very expensive. That's what I'd want to do. I'd want to sell one ZB and buy one UB in order to take advantage when all of a sudden this calms down and pulls all the way back. Just like it did down here where it rallied, I think the same thing's going to happen here, and the ZB-UB is going to trade all the way down here. That's exactly what I'm looking at. Now, real quick, in front of you, I'm using Sierra charts. You get Sierra charts with an Infinity Futures account. The reason why I send all my clients over to Infinity Futures to trade relative value is this. If I'm going to do a ZB-UB trade on most platforms, what's going to happen is they're going to charge me $5,000 of margin for the ZB and $5,000 for margin for the UB, just estimating, give or take 10%. So it's going to be like $10,000 of margin to put this trade on, which is just absolutely ridiculous. What Infinity Futures does, because they specialize in futures only, is they use exchange traded margin. So you're able to do this same exact trade with a one lot. And again, I'm estimating, but the margin is about $1,500 or $2,000. So that's obviously a lot more practical way to trade. So that's why relative value traders are always going to need that exchange traded margin. And that's why I send all my clients for futures over to Infinity, because it just makes sense. If you want to learn more about this trade, you guys can email me, Jonathan@ActiveDayTrader. Anytime, I'm happy to discuss. If you want more information about Infinity Futures, just email my guy, Patrick. I'll leave his email on the screen as well. Thanks a lot, guys. Hope you enjoyed the video.